Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 13th of June 2024. My name is Richard Lee and I made the stockradar.com.au website for you. Okay, a couple of positive thoughts this week. Firstly, we're looking at independent trends. At the moment, we've got 42 uptrending stocks of 156, which means there's only 114 that are going in downtrend. So there is a small group keeping this market going, and our indices are actually at their high, so that tells you a little bit about the quality of those stock picks. So some stock picks are doing very well and some aren't, the majority aren't. So we've got that perspective there. We've got those trends there. The other thing I want to talk about is perspective. Is a bit of a sudden drop earlier this week, which sends shudders through our spine sometimes. They go, well, this is it, but market bounces back, and really, the indices overseas are making new highs again. We're not far away from our highs. Markets go up and down all the time, so we do get an initial shock when these things happen, but we've got to go back to the trend. Stocks go up and down with the trend all the time. So, we don't want to worry too much about it. It's the big picture we're talking about. So, as weekly traders, we sit back and let the daily traders slug it out. And at the end of the week, in the quiet of the weekend, we look at where the market finished and we make our judgments on what we're going to do next week. So that's what we try and do, just to try and keep a little bit of saneness in the market. Okay, so the market has been a little bit weaker. Parts of the market, mainly pressure from from the miners. BHP, Rio, Fortescue, Woodside, S32 have all come down, and they're all quite big weights in the index. Commodities take a back step. So our stocks are still doing okay. A lot of good industrial stocks here. We're going to look at some today, but not all. And those that aren't, we knock them out straight away. So we keep those good trends moving, and we can knock out the ones that don't do too well. Okay, so let's just go now to zeroing in on trend. I'm just going to continue that theme at the moment because it's so important to focus on these things, because there are some great opportunities there. Not a lot, but some good ones there. Okay, so some of the ones we're looking at the moment: ALQ's a recent breakup. CBA's just keeps knocking the lights out. Fisher and Paykel started to move off. We've got Genesis Minerals, okay, that's also doing okay. In that metal sector as well, there's a couple of emerald resources. It's also doing well, so they've got a bit of independent strength there. GQG continues. IAG, you can see in the chart there. It's just been such a slow burner, this insurance, and the financials, and some of them doing very well, Magellan and things like that. So some of these stocks just keep making new highs. It's not being a monstrous moves high, but they are steadily moving high, which is sort of a nice thing to have at the moment, this steady uptrend. And then they've got Magellan Financial, we've got NAB's doing okay near its highs. QBE is the other insurer, which we'll have a look at a bit later on, doing well. And QEB is a recent breakup, also doing very nicely. So there's some good trends, the good trend intensity ratings there for those stocks. The stock pick count, again, we're not picking up a lot, but there's still one up this week to 61. And there you can see the 42 stock picks are 156, leaving the 114 going down. So that just puts into perspective where we need to focus and not take a general view of the market. Having said that, the general view of the market, or the ASX 200, is the top 20th, because that's the driver of that index. Anyway, so that's your stock pick count update for the moment. That's where we are. Okay, so let's go and have a look at a few charts. Starting off with the Dow. Again, it's having a little bit of a correction. It's not making new highs like the S&P and the Dow, but still not shying away. There's some good volume down here on the buy side, and not a lot of selling at the moment. So it's not as if the sellers are jumping on this sideways movement at the moment. So the Dow looks okay. S&P is making new highs, simple as that, good volume. And this is like the race between Apple and Nvidia to see who can be bigger than the other one. So I see Apple won again last night up to 4.9 trillion or whatever it is at the moment. So, and that polarised index in Nasdaq, unfortunately, even though there's a lot of stocks in there, those few stocks dominated at the moment. So it's keeping it on its merry road higher. Our market, well, we dumped down a bit this week. Good week last week, not such a good week this week. But in the end, we're really up near the highs. So again, that perspective thing we've got to have. And that's the index, and it's those main stocks, And with the commodities a bit weaker, it means the financials are probably doing okay, like the insurers and like the banks, and they're the standouts at the moment. Okay, so now we go to gold. Again, the commodities have a little bounce this week. So from our big correction here, we broke out. We're now holding this game pretty well at the moment. Volume's a little bit mixed, although it's probably a bias towards the buyers there. Momentum's still positive, so gold looks okay at the moment. Copper, again, a little bounce this week. Not a huge one after the fall, but we had a bit of selling coming on here, so it could, it's a commodity. It could be quite volatile, so it could quite easily come back to S1 and then have another shot at the highs. But we'll just keep an eye on that one. The copper prices are better, which is a good sign. We'll just have to see how far it comes back and if we get another bounce from here. Okay, Brent crude, well, it's just hovering over its lows, really. We're seeing a rally, which is not that surprising because we are down near S1, which we've bounced off a few times. Slightly higher bounce here, which is probably a good sign, but really we're being dominated by the sellers here at the moment, and momentum is neutral. So not a lot there. Commodities just holding fire at the moment. Okay, so let's go to our stocks. There's a few stocks for today. The one we've been following, which is Fisher & Paykel. Again, it's performing well. It's recovered. A little bit of a sell-off, but it's recovered pretty well. It's rating at trend intensity rating of 10 at the moment still. So this is all as of last week. The trend is looking like it's really developed nicely. We've got this little turnaround, this big accumulation pattern, and we get the breakout, which suggests we're moving into that uptrend phase. And performance is good because the price is rising, the volume is good, momentum is good, it's above the average, so the signs are all very strong. The trending attributes are all very strong, and it gets a rating of 10. Okay, so that's Fisher & Paykel, which we've been monitoring. Pro Medicus, just showing you this, just to remind you, these trends just go on, and they just keep going on. So for Pro Medicus, which is one of those stocks which has got hit its target pretty well as far as it's in the imaging business, things like that. So it's just done very well. The growth has been enormous. So the trend has been higher. Again, our strategy here, we did get stopped out here on a sharp pullback of quite a lot of dollars here. That was that pullback we had a while ago back in February. But it's rose straight back up. We did get stopped out here, but we're back on it here. So this is how the strategy works. If we want to keep on these trends, we follow the initial trend. If we get stopped out, we get stopped out. The thing is we have profit to protect, so we lock in that profit because the stop overrides all. We can wear the fact that we missed a little bit here for the sake that we protect that profit. It's so essential to do that. I'm going to talk a little bit about that when I look at the IGO chart in a minute, but this protection thing here really is not a matter of being right or wrong. It's a matter of money management. So we've managed our money, we took our profit, and now we're on a new trade. So it's like a separate trade that we're doing compared to this whole thing. So we sort of look at stocks a little bit differently to most people. We're just looking to get those stages where the market is going to jump out of the gates and go for a run, which is what Pro Medicus is doing at the moment. So it's $130 at the moment. Okay, we saw one stock breakout recently, which is ALQ, which is doing pretty well in the scheme of things. It's come back a little bit, but again, recovered pretty well so far this week. Trend intensity rating of 10. We can see the trend beginning to develop through here. It's now starting to break up into new high territory, which gives us a really good confirmation of buyer strength. And we get added to all these indicators at the bottom here. We get a trend intensity rating of 10. Great participation here. So good volume. And price momentum is also good. So ALS is looking like it's going to continue high for the moment. Okay, again, talking about trends and getting stopped out, we see Technology One, which we can see for many years now to this beautiful big uptrend, and we just try and take chunks out of these trends because that's what we do. And here we've got another little move. We had a little correction pattern through here. We stopped out here, so we went sideways. The market then rallied to the highs. It's come back, found a higher low, which is a good sign of strength, and it's broken higher again on good volume. So the stock is probably going to go off again and continue on in this big uptrend phase that we have seen for so long. There it is, much better there. Okay, so Technology One, it's been a good performer, trend intensity rating of 10, doing very nicely, thank you very much. Stay on it. Okay, IGO I want to talk about, and it's got a little bit to do with portfolios because the risk management process we have in place is a strict one and is there for a reason. Sometimes people may say it's too close, but it really depends on what your strategy is and what you're trying to do. So my strategy is capture trends, and I get stopped out to protect it, and that stop can't be too far away, otherwise I lose too much. So with a stock like IGO, Independence Gold, the history, as we know, has not been a good one. Like a lot of these mining stocks, it got blown out of the water straight up here, up to nearly $17 at one stage back in 1922. It then came down, we got stopped out up here of this move, this big trend move up here. And then from this point on, we got stopped out, which is not a bad thing, but I think at that stage there was a lot of excitement about these stocks at the moment. So we get a pullback and it goes to rally towards the new high again, so people may be getting excited again, but it didn't happen, it failed. And lower low, and then we've got another attempt here which failed, and then we get a lower low again. So the importance I'm trying to point out is that we got stopped out here, so we're not involved in any of this move from $17 down to now $6.50 and still falling. So it's imperative we don't, because we run 5 stock portfolios, which is our highest performing portfolio because we're very high conviction. Okay, so which means that 20% of your funds is in one stock. So that's very important. You manage your money very carefully, because if we take a big loss, it's going to take a big chunk of our portfolio value out. So we can't afford to do that. So this is a killer for a 5-stock portfolio. So you must listen to your stops. You must get out and protect yourselves, and never, ever, ever be involved in this sort of move, because that's a portfolio killer and it takes a long time to recover from. So Independence Gold, all in all, is still going down. The downtrend is still in place. It's just fallen through support here again. I don't know where it's going to head to, but certainly at the moment it looks like the pressure is still down, and we don't want to be in this stock. Maybe one day we will be, but if we can sell it here and pick it up down here, we'll be very happy about that. Trend intensity rating is still -10. New lows, below the average, volume's picking up a little bit, and momentum's still very weak. So in that instance, as I said before, just up this little notice up here, this is what we would have looked for. Once we got stopped out here, we really needed this high to fall, which never did fall. So that kept us neutral in this stock here. So that's really how the strategy of the stops works, and how important it is to take the stop and not say, let's just go for another week, or let's just wait a little bit, whatever it might be. Once your stop's hit, you must get out. Okay. A couple of little ones for you. AUB, we looked at this about a month ago, and it's back testing these highs again. It just can't seem to get through there. But the good thing about those is, which you know what I like, is that the harder they resist, the bigger they fall. And when this sort of move falls, then you get a good jump higher, because it does create a change in buyer-seller behaviour. These sellers here must cover their position so they become buyers. Added to the already building buying in here, it makes for a market imbalance, and that's when the price must jump. Okay, so for AUB, it's trying again this week. It hasn't done it yet. We've got some two-way volume here a little bit, probably biased towards the upside. We've got a little bias here towards the upside, and momentum is positive. So we're really just waiting for this high at R1 to fall for AUB, because it looks like it's done very well. It's quite an exciting stock. If it does break high, we could be in for a little run there. Okay, I mentioned to you before IAG, and this is QUB, which we've had 2 little good runs here. We're still in one at the moment from this little break above $16. It's now up around 18, and it's continuing to just make new high, little corrections, new highs, and off it goes again. Volume's been pretty good throughout this move. Momentum's strong. It's above the average. Everything looks good for the QBE. It's just, again, it really has, since 2020, it's gone from $8 to 18, so it has risen quite a long way. It just seems like it's been a slow thing, because we're all a bit impatient. But this current trend I've just got at the moment is this new high above here, which we took above $16 and now $18, and everything's looking good with the move at the moment. So QBE and those financials, there's some really good ones in that financial sector that are doing quite well, so you can check out those on the Trading Centre. Okay, so this is stocks I've got for you today. Just a little bit of perspective for what you're doing. Don't worry too much about what the market's doing. Just focus on your own stocks, focus on your own strategy. Okay, so I just want to reiterate a few things on the trending basis for me. That why it's important that I do these things, the sort of the premise as to why I look for trends. I know they repeat all over the market, and you see the trends that I show you today, whether it's Pro Medicus, QBE, whatever it might be. They all take different shapes and sizes, and we manage them the best way we can, but they repeat and they extend, like Pro Medicus and like Magellan. They just keep going up and up and up, and if your stop doesn't go off, don't get out, don't take profit because you want to take profit. Listen to your trade plan, it'll steer you in the right direction. So they are a worthy focus. the trends are your friends. They're your friends basically because you're going with the flow of the market. You're trading the direction of price movement, which is an odds-on way to trade. So all those little things that we do is to try to cut these corners, trying to make sure we're focused on what the market's likely to do, not what it's not likely to do. Okay, and trends move independently. And if you go to the trading centre at the moment, down the bottom there, some of my sectors down the bottom there, there's only one or two stocks in a lot of these sectors that are doing, whether it's Webjet in the consumer discretionary, or there's a few other stocks there. But really, as a sector, it's not moving, but some of those stocks are. So the independent trends can certainly be worth watching. Okay, so that's really all I got for today. Keep your focus on your trends, focus on the strategy that you have, and you will be okay. All right. So what's happening at the moment? Well, the newsletter was out. You can check out my blog with lots of articles. Take a free trial. Check out my trading centre with all my stops, my entries, exit stops, and alerts there, and trend intensity ratings. Okay, so make sure you check it all out. So that's really all I've got today. The market's been quite an interesting market, but there's some great opportunities there. But it's important to keep an absolute focus on your own trading strategy, on your own trading rules, and don't let other what if or maybes get in the road of you, okay? Because you focus on your strategy, then somebody says something to you in here, but what if? If it doesn't come into your rules, basis for your rules, forget about it. Doesn't matter. We can't incorporate everything. Okay, so what I'm trying to tell you is they don't matter. If they're outside your rules, they don't matter, whatever they are. Okay, it's not a part of your decision-making process, so they shouldn't be involved. So as we know, they're all different ways to skin a cat. What I do is just one way. There are lots of different ways to do it, but you need to have a lot of these encompassing rules, like risk management there, to make sure your strategy works properly. Okay, ours is focusing on trends, and that's what we do. We manage them with trailing stops effectively. That's in a nutshell. So watch your trends, heed your stops, stay safe, and I'll see you all next week for a few more updates from Stockradar. Okay, see you later.